The dollar's demise and gold's rise. Is this in the near future? Ken Hoffman from Red Cloud Securities weighs in on this topic and more on this episode of Silver Bullion Television. Hello again, everyone, and welcome to another edition of Silver Bullion Television, SBTV. I'm your host, Patrick Vierra, part of the outreach team of Silver Bullion here in Singapore, where we want to help you truly secure your wealth. Ken Hoffman, head of commodity strategy at Red Cloud Securities, joins us today. And we're delighted to have Ken join us as a first time guest. It's time to saddle up and silver up for Ken Hoffman. Ken, welcome to SBTV. How are you doing?
I'm doing very good. Thank you very much for having me.
Yeah, glad to have you on. I've seen you around through the years and finally had the nerve to ask you to come on. And so I appreciate your accepting and happy to have a chance to chat with you. So if you don't mind, I'll start off by asking you a bit about your background and about what a typical day at Red Cloud Securities for Ken Hoffman looks like.
Sure. So, just as a little bit of background, I spent my first 25 years careers on Wall Street. Worked as a portfolio manager in an energy and basic material fund, director of research for commodities at a fund, as well as I started Bloomberg Intelligence research on metals, where a lot of folks on this call, if they remember back that far, I used to do an awful lot of work, particularly in gold markets. I then went to McKinsey, where I spent 8 years and did a lot of work in the mining area, particularly in critical minerals, and left McKinsey a few months ago. And so I work with Red Cloud as their head of commodity strategy, talking about markets. We just released an entire research report on gold and why we think gold's heading to 10,000. And I'm more than happy to go through why that is. And then I also am an advisor to a number of critical minerals companies. I'll actually be heading over to China and Australia next week for one of the companies I work with, Firebird. But I also worked with some Canadian companies and some private U.S. companies up and down sort of the critical minerals sphere.
Well, if you're in this area and you do make it to Singapore, stop by and I will gladly bring you into perhaps one of the world's largest vaults with all that silver and gold in it.
I've heard about it, and that's that's one of the reasons. There are so many reasons why gold has been rallying, um, and you do see. I at night I like to watch the Bloomberg Asia, and they did a number of family office types of conferences, and pretty much every family office who would come on to Bloomberg would say, "We're buying gold and we're sending it over to Singapore with the other 10,000 ton vault over there. It looks sort of like Fort Knox." And it makes a lot of sense. I mean, I have been an uber bull on gold for a really long period of time, not so much for the conspiracy theories, but for the fact that one, gold is now under Basel III, a full asset, so it is a full currency, as well as the fact that the U.S. is trying in all their might and glory to depreciate the value of the dollar. And there's almost been a 3-to-1 correlation. Just look at the DXY, which is the dollar index. When it drops by 1%, gold goes up 3%. And the U.S. is looking to at least depreciate their currency anywhere from 30 to 50% over the next few years. And that on its own right puts gold around to 7 or 8,000. And I think you're seeing central banks and sophisticated investors moving to gold, realizing it's the one currency that the U.S. administration and Trump can't hurt. There's no central bank for him to attack. And so a lot of central banks are saying, hey, if we pile too much into one currency or another currency, he'll attack that. He can't attack gold. And so I think all those reasons are why gold is going to have a continued amazing run going forward.
Hey, you kind of answered my second question here, though, because, obviously gold has had a good run, but yet every day, every day I hear people asking me, hey, what happened to gold? Why isn't the price moving? Has the momentum stopped? What should I say to this type of sentiment?
I mean, I think you need to have a slight bit of patience that everything doesn't go to the moon over well, but I think you need to look at the overall trends, why gold has run. And again, I think I had been on Kitco and a number of other podcasts in the past talking about what we call de-dollarization, and that is exactly what's happening. And it's only been amplified by the Trump administration. So, what is de-dollarization? The world is pulling away from the global economy. And going back to World War II, really, the bargain the US has had with the world is this. I'm going to open up free trade globally. That's going to force the rest of the world to use my currency, which is the dollar. Um, on the one hand, that's really important. Another leg of the stool is I'm going to run large deficits in the US because I'm spending very, very heavily on my military to protect the rest of the world. And therefore, I'm going to run these big deficits. But because you trade with me with all your dollars, you're going to take those dollars and buy my deficit. And so that has been for almost the last 100 years the way the world order has been. And that's slowly but surely been unraveling. If we went back to 2000, around 72% of global trade was in US dollars. Last year it was around 54, 55%. So it has been declining. But I think the measures by the Trump administration is just puts on steroids that decline. And so if we look at last year, I think the numbers were about $9 or $10 trillion in US dollar trade. If that just drops by 1 trillion, that's about 8,000 tons of gold at $5,000 an ounce. So what you're seeing is as the world is changing the last 100 years, so now the new normal is I'm not going to trade as much with you. I'm putting 15 to 20% tax on everything coming into this country, which will inherently reduce trade, as well as those countries often reciprocating, not buying our stuff. So overall dollar trade is shrinking pretty significantly. Um, and I think that's really important. At the same time, if the US deficit is going up, and yet the buyers of the debt, that whole deal of you're going to trade with us, take dollars, those dollars are going to be used to fund our debt, no longer is occurring. And so you're seeing this, the only way that the US can sort of have large deficits and less trade is to devalue the dollar and pay back those deficits with cheap dollars. So that's exactly what's going on. Trump has something called the Mar-a-Lago Accord, which is pretty much, going to try to depreciate the dollar. And if we look back at the dollar over the last, 2 decades, 2008 was the low of the dollar, which is about 30% or 35% lower than where it is today. I think we quickly head there. And again, the only thing to fill that vacuum and what smart investors are realizing is to buy gold because that is where most of the currency is going to hide from the U.S. dollar.
Ken, this devaluing of the dollar, for years, for lack of a better term, the conspiracy world has always said, the dollar's going to fall, it's going to fail, it's going to go to zero, this and that, and it's a controlled demolition. Would you go so far as to say that it is a controlled demolition, or would we just say maybe that the policies are maybe not the best policies as opposed to something intentional?
Yeah, I mean, I think part of it is I don't think this current administration really thinks things through. They're very much on what happens today. I call it the sugar high. Trump constantly is chasing the sugar high of markets, but the bulk of it is those long-term trends is that the US is going to pull away from long-term trade. The dollar just won't be necessary. There's going to be a need for all those dollars. There's a lot of talk here in the US that the US itself might start, like the Treasury will buy its own debt to cancel it. All those things are the cause of the decline of the dollar. And so again, I don't think it's this grand strategy. I really don't think it's, I think it's an idea to devalue the dollar. But everything Trump does is devaluing the dollar and sort of really destroying its value. And so I think, like I said, the dollar has been de-dollarizing for a long time. You can see that in the trade statistics. But if we were 53, 54% of global trade in 2024, by 2026, that number probably drops down to about 40% or so. Again, that frees up. Central banks have to figure out what to do with the trillion+ dollars less being needed. And they're just not going to hold dollars. What they're going to do is they're going to sell U.S. Treasuries. They're going to sell their all their currencies, and then what do they go into? And they're petrified to go into one currency. So they're very much afraid if they all pile into Japanese yen or Chinese yuan or the euro, that Trump will say, oh, he's already threatened. If you do that, he's going to take the US SWIFT system where all these trades go through and sort of penalize those countries. He can't do anything about gold. There's nothing for him to attack. And that's why if you look at central banks' balance sheet, the dollar is the number one holding by central banks around the world. Gold is number two now. And so I think that you'll probably see that flip and gold will become the largest currency. And I think that's important. Gold is a currency. And it's not this Netherlands with crypto. I am not a big believer in crypto. I am fearful beyond belief that one morning we wake up and some quantum computer in bad hands around the world comes in and all of a sudden has stolen $1 trillion worth of Bitcoins. Oh, sorry, it's gone. You can't do that with gold. We talked about the Fort Knox building built in Singapore. That gold is there. It's safe. Central banks know that. They can trust it. And it won't impact the global system. And so gold will become and is becoming very quickly the world's number one currency.
Yeah, Ken, how did gold pass the euro to become the number two in central bank reserve holdings? And is there a chance gold could eventually sneak up on the dollar and surpass the dollar?
Yes, and the real reason is what we call Basel III. So there have been a series of central banking laws that the world has agreed upon. How does central banks do their accounting? And so for a long time, a currency was a currency. So if I have dollars, $1 is worth on my balance sheet $1. 1 euro on my balance sheet is worth one euro. But until very recently, a $100 worth of gold on my balance sheet could only be accounted for as $50. So that the way the accounting was done, there was a real disincentive for central banks to own gold because for every $100 of gold they bought, they instantly had to take a 50% devaluation. And that is why you saw really in the 1980s and the 1990s, a lot of the central banks saying, why am I holding gold? Because it's an instant devaluation to me. I can't really see why it has value. You heard a lot of people saying, gold is dead, everything else. But when they then changed Basel III, which came into account a year or two ago, you all of a sudden start to see central banks saying, wait a minute, gold is $100 is worth $100. And again, I think there's been this huge fear about retaliation by governments for particularly the US government, if you do all head into one currency or another, and these trade wars, I don't think end. I think the entirety of Trump's term, you will constantly wake up to a new tariff, a new attack, a new this. It's just the way they operate. But again, gold is outside that. So central banks say, aha, here's a safe currency that cannot be attacked and is recognized globally. Therefore, they're all piling into gold. And that's how it surpassed the euro. And I do think long term it will surpass the dollar.
Yeah, that's pretty interesting because I think you're going to have a lot of people on both sides of the fence should this happen. I mean, I think you're going to see some people really happy, and then I think you're going to see some people who let's say may not have seen this coming, and they're going to be very concerned with their investments should this really happen. But Ken, how do you see, let's say, things like real estate? How do you see, let's say, the stock markets? Should gold really pass the dollar?
Going to be interesting to see. I mean, as for real estate, again, it depends what currency you're valuing that real estate in. Obviously, a long-term devaluation of the dollar really takes, and you hear this like exceptionalism of the U.S., it takes that valuation away. And I think, if you're in the U.S., real assets do hold their worth. And so I think gold is a real asset, real estate's a real asset. So from that standpoint, I think you'll see a lot more inflation, but your real assets should keep up with that. I think that's fine. In terms of stocks, that's going to be a different story. The U.S. looks like because of Trump's policies, it will enter a recession in 2026. It is, from a metal standpoint, although most metals are valued in dollars, you get the benefit of the dollar being worth less and less and less. And You've pretty much have seen, like, for example, copper, which is seen again, Trump hands today, the price of copper in the U.S. declined 22% in the last 24 hours. But it's, in general, copper's up 10% this year. The dollar's down 10%. So copper actually has been flat in dollar terms. If you looked in euro terms, copper is flat for the year, but in dollar terms is up 10%. If you look at gold, the U.S. is down 10%, gold's up 30. So you see how those correlations might work. The depression in the U.S. or a recession in the U.S., which I think it does occur in 2026 because of the, 15 to 20% tax put on the world, basically, that will force a recession, and that will probably be pretty bad for stocks.
Yeah, that's it's pretty insightful considering so much
I mean, look, we
uncertainty.
are entering a new world order, and look, I mean, we should be used to this. Look what's happened in the 2000s, from 9/11 to the great financial crisis, to COVID, now to Trump. These are major changes to the global world order, and a lot of them are linked. 9/11 led to a huge military buildup in the U.S., huge deficits in the U.S. Great financial crisis caused the world to put huge deficits in there. And then COVID put the world into large deficits. So there's been this massive printing of money, particularly in the US, which has been the most aggressive in going after these events, be it military spending or spending in COVID, et cetera, because the US was very slow to react to COVID. Once the problems really reared their head, they had to put so much money into it. And so all of these things have occurred where gold has just been gold, 2 to 3% adding to the world gold pile every single year. It's nice and steady, and it gives a lot of stability to the market in a market that's unstable. And so I think all those things combined shows you why gold. Now, from an equity standpoint, obviously equities are trading at nosebleed levels. You pull up a chart from what equities did in from like 1926 to like 1929. It looks eerily similar to the chart today. My biggest fear is, that Trump really has gone too far, and it just really causes the world to go into not only a recession, but a depression. Very, very, again, very good for gold, because the world's going to print a lot of money to try to get itself out of the mess and all that. But in terms of equities, could you see a severe correction in equities? Yes. I mean, you take some of these stocks, I just don't get the valuations. I've been looking at companies for 35 years, and Tesla, it makes absolutely no sense for me. Here's a company whose free cash flow was down 90% year over year, and the stock's trading at 300, 400 times earnings. It fundamentally makes no sense whatsoever.
Ken, with what you're saying, is this possibly one reason why we're seeing Jerome Powell kind of reluctant to move the needle anywhere? Because if there is a recession, I think historically the Fed, they would need to lower some 4 to 5 basis points in order to try to control a recession and turn things around.
Yeah, I think the US Fed's in a hard place because, on the one hand, you are seeing inflation rise in the US. Numbers came out today. Slowly but surely, we're sort of like the frog in the water being heated up. Inflation is heading up in the US. And, tariffs, much as, people like to say, it's the other guy who pays the tariffs, it's the consumer who pays the tariffs at the end of the day. So you've been hit with a 20% tax, which is, tariffs in the US are up 1,000%. Year over year. So you are seeing that huge tax. So Powell sees that inflation is coming. And he also knows that inflation will slow down the economy. Lowering rates, I think the Fed's largest fear is he cuts rates and the market doesn't change. So if all of a sudden he realizes he has one massive tool, which is the power to reduce rates, and he reduces rates, and the market is saying the U.S. is in such a weak position, budget deficits are so much, you're going to have to borrow so much, and there's fewer and fewer buyers. Again, fewer dollars being traded overseas, that means fewer buyers of U.S. dollar treasuries, that he could cut rates and no one cares. And if all of a sudden you're pulling on a string and the string isn't attached to anything, then all of a sudden the world's going to be like, wow, the US has no control over its own interest rates because of all the other mess that they've done. And therefore, I think that's one of his biggest fears is he cuts rates and nothing happens. Where it used to be you cut rates and all of a sudden mortgages go down and car loans go down and it's really good for the economy. And the other reason he doesn't want to cut rates is like the economy's in really good shape right now. You know, Trump again is trying for a sugar high. Cut rates, just blow it out as hard as you can when the economy doesn't need it. We still have, unemployment here is still historically at extremely low levels. Um, so it's sort of like the Fed's sitting there like, we don't want to do anything because the only outcome may be really, really bad.
Yeah, Ken, that's a great point. And in fact, I was just looking at the Fed's M2 money supply chart, and yes, they are printing money again. And I'm also wondering if this is why Powell does not want to cut rates, because typically when you have an oversupply of money in the economy and this oversupply of money is chasing too few goods, it is a recipe for inflation. So maybe that's another reason why he's hesitant to cut, since he knows we are printing money again and tariffs may limit the amount of goods coming in.
It's a really tough situation. I mean, and again, the fear is you do have a major crisis. The US does go into recession. That means revenue will dry up. That means spending for unemployment go up, really blows out your deficit even worse. God forbid something flares up in the Middle East or Russia and the US starts spending more in military. All of these things mean a lot more debt. And if no one's going to buy that debt, will the buyer of last resort be the Fed itself? So the Fed will issue debt and then buy it and cancel it. And again, if that is done, which is sort of the ultimate button to push, that makes the value of the dollar pretty much worthless because it tells you nobody wants it. And so that's the single biggest fear here I think the Fed has is losing control over your currency. Again, it's every reason to buy gold, and it's every reason to be really, really scared about what's going on with the US dollar. So like people say, well, how do you judge things? Just make sure on your screen you have the DXY or there's a Bloomberg index of the dollar. Always watch what's going on with the dollar. And if that continues to its decline, be really, really nervous.
Yeah, Ken, with the DXY since the beginning of the year, I've seen it down some 10%, a little more, a little less. I think right now we're at about 8 to 9%. You mentioned it could possibly go down some 30 to 50%. Should this happen, what are things going to look like?
Now, again, I think and this has been talked about before Trump was elected. Again, it's called the Mar-a-Lago Accord, that he believes if, say, he cuts the value of the dollar in half, he'll be paying off his debts with a far cheaper currency. So again, I think very simplistically, he says, oh, the dollar's less, therefore I pay off my debts less. He's not really considering all the other implications. It's always the second implication or the third implication that really messes you up at the end of the day. And I don't think the White House is sophisticated enough to see all those different impacts of the policies they have.
Yeah, I think there are a lot of people seeing this as it's kind of like a puzzle where these pieces they're just not fitting right, and we're having to reshape them to kind of make them fit like a force fit. And but just to be clear, this isn't financial advice, but where do you see gold going within the next 5 years or so before the decade is out?
Well, again, I mean, if you look at the beta of gold, it's been pretty consistently. Just again, let's speak to our dollar story. A 30% decline in the value of the dollar would mean roughly a doubling of the price of gold. So that gets you to, about 6,800, 7,000 on the price of gold. Again, you could see momentum behind that trade where people sort of anticipate, okay, this is going to continue, and I really don't want to hold gold. So the upside of gold, I've written in my work at Red Cloud that $10,000 over the medium to long term is not impossible at all. And I don't even think in the next 2 years that's 6 to 8,000 is at all out of the question either. What's been interesting is, gold equities have not kept up with the price of gold. I would watch for a lot of consolidation in the gold industry. And I'd also watch for some of the larger gold companies to be acquired by mining companies. It wouldn't surprise me if some of the large, you've seen like Barrick Gold get into copper. Now so far they changed their name from Barrick Gold to Barrick Mining. You've seen Newmont get into copper as well. It's very easy to say if large gold companies are always looking for acquisitions to move the needle. So if I'm one of the largest mining companies in the world looking at these large gold companies, which to them aren't terribly large, makes perfect sense. And once that occurs, you're going to start to see the juniors start to gobble up each other. And then you just start to see sort of this feeding frenzy out there of that. And so, the gold equity should even outperform gold because you're paying for gold on the ground. And so, usually there's massive amounts of gold behind that stock. And so, besides gold, the secondary effects is the equity should significantly outperform. And there, the JDXJ, which is the junior gold index, it's currently around 65 or so. If you looked historically at where the gold price was versus the miners versus the spread and margins, the JDXJ should be about 200. So these stocks have terribly underperformed. And so I would expect not only gold, but the equities, the companies who have the gold in the ground will see a significant appreciation.
All right. I know you have to head out and have some important things to do. So, Ken Hoffman, it's been a real treat. And, I hope we have another chance to speak with you. And of course, could you let us know how we can follow you and get more of your insights and views?
Sure. You can always talk to Red Cloud Securities. They're pretty good about sending out to clients. They deal with junior gold miners. Also, you can always just follow me on LinkedIn, where I like to publish sort of thoughts on all things metals. So feel free to just reach out to me on LinkedIn, and I'm happy to have you follow me there.
All right, Ken Hoffman, I appreciate it. Let's see how things go in a couple months. And as mentioned, hopefully we'll have another chance to chat and we'll see where gold and silver go.
Sounds great. Maybe I can be in studio you in Singapore. It's my favorite city on earth.
Actually, hey, if you're here in Singapore, let me know and I'll go ahead and get you into the vault and we can go ahead and have a chat there as well.
Sounds great.
That was Ken Hoffman from Red Cloud Securities. To see more of Ken's views and work, please head on over to www.redcloudsecurities.com. If you like this video, please do subscribe, share, and give it a thumbs up. All are greatly appreciated. Audio-only versions of this interview can be found on iTunes and Spotify.